Let's keep talking about the shutdown a little bit here. U.S. government shuts down as Trump's last-ditch effort fails. And from jobs to travel and more, here is the potential impact of the aptly named Schumer shutdown. The U.S. federal government officially entered a shutdown at 12:01 a.m. on Wednesday, October 1st, after Congress failed to reach an agreement on a spending plan. While the headline news introduces a new layer of uncertainty for markets, historical data suggests that these events are often short-lived and have a limited long-term impact on equities. For investors, looking past the political turbulence is often key. Here are some facts that you need to know. History shows that government shutdowns are generally not a reason to panic sell. I'm super thrilled that this is literally the first sentence of the first point, because this is something that I absolutely wanted to convey here today. Definitely something I wanted. There's no reason to panic sell here today. If you're going to sell something, make sure that you have a really good reason and you feel good about it. Don't panic into anything here today. The U.S. government has shut down 20 times since 1976, with the average shutdown lasting only 8 days. While some market volatility can occur, investors have generally looked past these budget-related disruptions. Market performance following a shutdown has been strong. The S&P 500 has historically posted average returns of 1.2% in 1 month and 2.9% 3 months after a budget is passed. 1 year after a shutdown ends, the S&P 500 posts an average gain of plus 13% and has ended higher in 86% of cases, according to the Kobisi letter. Now, I'll go ahead and give you this story. There's a couple of good tweets that you can pull from this story. I started with one here that I'm going to share with you folks now. This is, in fact, the Kobisi letter. And I think that this is really important. I've said for a long time that the media turns your brain to mush, and it is not something to be trusted. So we're going to go with this: government shutdown facts that the media just simply won't cover. The average length of the shutdown is 8 days. We just talked about that. The S&P 500 has ended higher 1 year after a shutdown in 86% of cases, which we just highlighted. The S&P 500 posts an average gain of 13% 1 year after the shutdown ends. During the 35-day shutdown in 2028, good Lord, Ryan. In 2018, the S&P 500 rallied 11%. That was the longest shutdown ever. S&P rallied 11% during that time. While the government is shut down, the U.S. defers about $400 million a day in costs. And the Fed generally turns more dovish if government data releases are paused. Historically, the market actually welcomes a shutdown. So again, I suspect that we're going to see gloom and doom stuff. We always do. The stats don't necessarily paint that picture. They don't necessarily paint that picture. Now, there are some risks. It's not all going to be butterflies and roses, if that's the saying. The most significant immediate impact for financial markets is the suspension of vital economic data. The Bureau of Labor Statistics confirmed it will not collect or release any data during the shutdown, meaning that this Friday's highly anticipated jobs report will be delayed. This data blackout is the primary concern for investors and the Federal Reserve, as it muddies the economic outlook. As Jim Bianco, president of Bianco Research LLC, noted, a prolonged delay in statistical reports can become a significant issue, making it difficult for policymakers and investors to make informed decisions. We covered this yesterday, but as the stats say, it's not likely what's going to happen. These shutdowns are often short-lived. And probably won't produce any major market or economic negative impact. Goes on to say here that the duration is everything. While short-term shutdowns have a minimal economic impact, the longer the closure lasts, the greater the hit to growth. So this is definitely something that we should stay on top of here. A shutdown can reduce government spending, thank God. Delay paychecks for hundreds of thousands of federal workers, sad trombone, and disrupt private businesses that rely on government services. Shoulder shrug. The 16-day shutdown in 2013, for example, lowered annualized GDP growth by as much as 0.6%. That's according to the Office of Management and Budget. For now, LPL research notes that such events can create tactical opportunities to buy into a seasonally strong period for stocks. However, the key risk remains a prolonged political stalemate that could have a more tangible effect on the economy. So again, as the header here said, this seems to all be about duration, not the fact that the government actually shut down and the market is barely gapping down 0.5%. Here, we talked about this a little bit yesterday. Let's clarify this. Which other services and institutions are closed during a shutdown? Military employees would likely not be paid during a shutdown. National parks would be closed. The Labor Department and IRS would operate on a limited basis with no managed helplines for consumers. Regional Department of Veterans Affairs offices are expected to be closed. Social Security benefits would still go out. The FDA would not process any new drug applicants. Supplemental Nutrition Assistance Program, or SNAP benefits, would be covered for up to 1 month. Remember, the longest shutdown ever was 35 days, 35 days. And SNAP benefits are going to be covered for a month. And the National Zoo and Smithsonian in Washington, D.C. would not be open. I will have to cancel my plans for that.